Hi dear audience, my name is Alexey. In this video we'll discuss the first property of horizontal support and resistance levels. It allows us to determine the trend direction, which is the direction of the market at the moment, and one can trade in case entry signals appear on the current or lower time frames. This requires the understanding of at least two nearest horizontal levels location, resistance and support. Breaking through one of these levels leads to the conclusion about further price movement. If the market breaks through the resistance level, in other words, is set to close above the nearest resistance level, one can conclude that the tendency is bullish and the probability of market movement in this direction is high. The same applies to the support level breakout. If the price is set to close below the level, searching for decline entry points is relevant. Let's take some examples in which a level breakout occurs, or the price comes to the level and tests it. Let's open the dollar-year currency pair at the daily time frame and look at what happens in the market. The current price is 110.360. Suppose that the rightmost candle on the chart was formed on the 2nd of March. Let's plot the nearest support and resistance levels. How they are plotted we considered in the previous video, so now we will not dwell on this. So the nearest resistance level around these price marks was formed on the 15th-16th of February. There was a bullish movement, after that bearish. Two bullish and two bearish candles formed the resistance level of the first type. Let's paint out the borders of this level with a colored rectangle. The nearest support level was formed earlier by several candles. The lower border of the support level is 111.678. Let me remind you that the level is plotted from the borders of bodies to the borders of shadows of the candles, where we visually see the market reversal. Here the level of the first type is also formed, since two bullish candles immediately follow two bearish ones. Let's paint out this level, the price zone, with a rectangle of a yellow color. What happens next? The price moves up, comes to the resistance level and starts testing it. It goes into the price zone between the upper and lower borders of the level and starts to rebound from it. That is, it touches it by shadows, tests it, but cannot break it through. After that, the market moves sideways for a while and then starts to strengthen again. During the next candle formation, the market was above the resistance level for some time. This suggests that the buy-sell trades were carried out even at a price of 115.492. The shadow of the candle is more than 50 points above the upper border of the level. Active trading was carried out on small time frames. Let's look at the candle closing on daily. The price didn't break through the level, tested it actively, was higher for some time, but couldn't enter on these marks, and set to close between the upper and lower borders of the resistance level. Thus, there is no fact of the level breakout in this candle. It occurs only if the market is closed above the resistance level and the breakout occurs by the body of a candle. If this doesn't happen, then we cannot talk about a breakout. It's just testing the level by the price. Let's consider the following example. Dollar-franc currency pair. We analyze the market state at the beginning of March. The price has been strengthening for a long time. Each new minimum on the chart was higher than the previous one, and this is a classic uptrend. However, on the 3rd of March, the resistance level was formed, as the aggressive bear candle completely overlapped the previous bull one, which means that we can confidently talk about the new resistance level formation. We emphasize the upper and lower borders. The lower is 1.0131 is plotted according to the borders of the candles. The upper one is 1.0145 according to the shadow of the candle. We paint out this level. What happened next? After the bear candle closing, the market continued to rise, i.e. the trend didn't change its direction, the price is strengthening, and literally after a day the price tried to overcome the mark 1.0145 again. During the day the market was above the zone. On smaller time frames, such as 15 minutes time frame, 1 hour time frame, there were certainly strong trends that made it possible to earn, but there was not the market closing above the resistance level on daily, neither in this candle nor in the next one. The level was tested by the price, but there was no breakout. In the next candle, a bear candle, there were also attempts to break through the level, but it didn't happen again. Such situations are very common. I recommend that you always wait for the candle to close, making conclusions whether the level has been broken or not, and what to do next. This is very, very important.